opposite. The story and the narrative becomes clearer and more certain, but the forward returns are actually typically harder to find. That's where I kind of think we are. We're making this transition from year one of a new bull to year two.
Chris, your wonderful research note, and folks, Christopher Owen, just really great leadership on trend-based technical analysis. The trend that you see is always broken up into a wonderful sector analysis. You talk about the sector matrix. Help us here. He's as good looking as Mr. Reeves now that I think about it. But Christopher Owen, help us here with the sector matrix that tells you it's not March of 2000.
Yeah, you know what's been so interesting about this move, particularly over the last several weeks as the market has paused here, is that the declines, the down days, have actually been very, very narrow. There has not been broad selling pressure on any of the weekdays. And I think about that, if you look at 2016, 2017, 2018, 2019, those were broad advances. So we've kind of transitioned into this period where the declines now don't look like what you've typically seen, those broad-based declines. They're narrow declines. When I go back to 99 was so narrow. By the time you got to the March 2000 market top, only 35% of stocks were above their 200-day moving average. That is when accidents happen. We've spent the last 6 months with something like 85 or 90% of the S&P above the 200. That is not where the big accidents tend to happen. So we look at that on a sector basis, and I'd say most of the market cap of the S&P is still pretty broad here. When that starts to narrow is when you've got to start thinking about problems. I just don't think we're quite there yet.
Okay, so we might not be seeing problems, but am I hearing you right to say that you're seeing lower returns going forward? And if so, how much lower?
Yeah, I think just thinking about this in historical terms, year two of a bull market tends to be decent, but not a straight line. Think about 2010, right? 2010, we're a year off the low. S&P finishes up the year, I think 13% in 2010, but you had a 17% drawdown along the way. Or mid-84 through, let's call it mid-85, right? Year one and a half of a new bull market. It's not a straight line higher. The year finishes pretty good, but there's a good correction along the way. Yeah. That is what I think 2021 is going to look like. I think the full year returns are going to be fine. What I'm a little less convinced about is how we get there.
Chris, one of the great things about trend-based analysis is the quiet times. John Farrow was talking before we went on air about the range bound back to February 8th. Maybe you've got a different date than I do. I go back to the wonderful Louise Yamada and point and figure charting, where she talked about distribution of the back and forth of a quiet time. What do you do in a quiet time to position yourself for your belief?
Yeah, you don't short dull markets. That's kind of rule number one. But listen, if you think about these last 4 or 5 weeks since early February, I think you're absolutely right when you talk about February 8th as kind of being maybe an intermediate term high on this market. But if you look at the last month, leadership has still been very, very pro-risk. This is not a rotation into defensive groups or risk-off groups. The breadth has still been pretty broad. The down days have not seen the big selling pressure. So this looks more like a pause here than it does the start of some big distribution phase. My gut says if we're going to get a good correction this year, and we will at some point, my gut says that's more of a summer story, not a spring story. And I think importantly, as we look at rates kind of settle here in this 145, 150 zone, I'll get more uncomfortable when bond yields are going up and utilities are going up, right? That's the market discounting trouble down the road or trouble in the future with the shift to more defensive leadership. That has not been the case yet. I mean, the last 2 or 3 weeks, as we've seen this 40, 50 basis point move in yields, utilities are still among the worst performing group. So I think you'd see more defensive leadership before big problems start to emerge.
Really good final point there. Chris, we've got to let you go. And you can get away without talking about Japanese banks as well. We'll do that next time. Chris Verone there, Strategas. Thank you, sir. Look, Chris brings up a really important point about what's happening beneath the surface, and let's talk about the why. two of the biggest weightings on the S&P 500. Let's take your pick. Apple, Amazon right now. In the last month, Apple's down 6.7%. In the last month, Amazon is down 7.4%. And this just walks you through, Tom, how technically challenged that benchmark actually is right now because of the weightings of some of the big tech players. You can have this huge run-up elsewhere, but you can have this range-bound headline benchmark of in and around 3,900.
I thought John Golub, John Farrow, was just heated. Is everybody on the show named John? I thought John Golub was just heated the other day with Credit Suisse about how you look at those big techs, not within the short-term back and forth, but more of a long-term play. I mean, everybody's got to think here about what their timeline is as they play in the market.
Short-term, the challenge, though, Lisa, it comes from one place. It comes from the bond market.
Yeah, and the idea of how quickly yields are going to go up and what that means in terms of whether it's a bad rise or a good rise. I will just point out, when you're talking about divergences, the Russell 2000, just amazing. It's up 13% year to date compared to, I guess, 3% for the S&P. I mean, just talking about this divergence, exactly to your point, John.
Not bad, not bad. Coming up on the program, big commodity run-up too. Francisco Blanche, Bank of America Securities Head of Global Commodities and Derivatives Research. Looking forward to that conversation.
Hello guys, welcome to another live trading. Sorry for the pause that we have. We have made some change and that's why we stopped streaming for 3 weeks. For now on we will be streaming, we will be live every week. We'll be live Monday or Wednesday. Okay, let's start. Today we have the US dollar Japanese yen here, the US dollar Swiss franc here, we have the Euro USD here, and the Euro Swiss franc here. We chose to trade these two this week because from our point of view these two are in the resistance zone, as you can see here and here. Let's do the one time. Okay, here at this level on USD Swiss franc is the resistance zone here. As you can see, maybe this one will go a little bit higher to this zone here, and then it will start the downtrend. The USD Japanese yen, as you can see, it breaks a little bit here. This is the resistance zone. It touches 1, 2, 3, 4 times, and this was the 5th time that touches this zone. We choose these two because today we have the non-farm employment change data on the USD, and we have the non-manufacturing, the PMI. The non-farm from our point of view, it will be a bad data for the USD, and that's why these two will go down. The USD today will go down. Tomorrow we will have, just a second, tomorrow we will have also on the USD data, the initial jobs claims that will be higher than expected, and that's why we chose to trade these two this week. Here on the Euro Swiss franc, the euro Swiss franc is on the resistance level 2. Here, as you can see, it started to form a M, a shoulder or a shoulder. As you can see here, it could be a downtrend. We will wait to see if it will touch again this level. If it does, we will place a sell here on this zone.
Do you think out of this pandemic we'll see more countries be willing to elect female leaders?
Okay, stay with us, and we will be updating as the streams goes on. Enjoy the live.
Built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
Friday is Jobs Day on Bloomberg Television, the first full jobs report under the Biden administration. What will it mean for the new stimulus package? The February Jobs Report, Friday morning at 8:30 on Bloomberg Surveillance.
A lot of what we've got to do is dealing with a maintenance backlog. Fix it first, I think, is going to be a very important mantra for us. It doesn't always have the same sizzle as adding something new, but the truth is we've got to be doing both, because you look at the conditions of so many of our roads and bridges as a country, and it's just clear that we can't allow that backlog to continue.
Pete Buttigieg there, the Secretary of Transportation, on the need for infrastructure investment and for fixing bridges and roads too. From New York City this morning, good morning. Alongside Tom Keene, Lisa Abramowitz, I'm Jonathan Ferro. We are counting you down to payrolls Friday. Chairman Powell tomorrow, an ADP report this morning, and then after that, the ISM services read for the United States of America. A better America, and that's the outlook anyway. Futures up 20, we advance 0.5%. In the FX market, the euro just a little weaker, a break of 120 in yesterday's session. It was a brief break, Tom.
Talk about the euro, John.
120.83. I'll talk about the euro. I'm talking about the euro. I'll talk about the bond market in Europe as well if you want, Tom. It's hard to reconcile some of the speeches that we've seen publicly, the comments publicly from ECB officials, and what seems to be happening behind the scenes.
Exactly.
The team over in Frankfurt reporting this morning that maybe the ECB does not see the urgency to step right in. And looking at the data that we've seen last week, it didn't look like they lift their bond purchases either when things were really starting to roll over, Tom. So it's hard to reconcile the speeches and the public comments with what is actually happening at the European Central Bank.
I'm looking at the Swiss 20-year piece, and it just won't go up in yield. I mean, I think the market's sort of helping the ECB get beyond this. Don't you see almost a yield stasis
since Thursday, Tom, things have really settled down.
Yeah.
Really settled down. I imagine that Chairman Powell is quite relieved about that. I just wonder what that speech looks like this coming Thursday.
Well, we will see the different Fed speeches and ECB discussions coming up through the week. Right now, the discussion in Washington, Emily Wilkins joins us, our Bloomberg government reporter. Emily, I want to go to the coronavirus relief bill, or whatever the bill's going to be called, $1.x trillion, and juxtapose that against President Biden's new statistic, which is 300 million vaccines. How linked together is the stimulus discussion you're witnessing personally with the good vaccine news that we see?
That's a really great question, Tom, because that $1.9 trillion stimulus bill, it definitely has funding in there for vaccines and for vaccine distribution. But the dialogue on Capitol Hill right now, a lot of it's focused about other things in the bill. The vaccine's probably the most bipartisan part. Instead, we're seeing a lot of debate from lawmakers about other things, how big unemployment insurance stimulus should be, who those $1,400 checks should go to. So those are more what's happening in regards to debate.
John and Lisa have a drinking game for whenever I ask about the middle, so get out the shot glasses. Emily, real simple. Give us an update on the middle right now. What's the power of the middle in your Washington?
Incredibly strong. I mean, a lot of people are just looking to Joe Manchin right now as far as what he wants, what he doesn't want. You've seen him say that he didn't approve that $15 minimum wage. And when the Senate parliamentarian overturned it, you haven't seen the White House go ahead and try and challenge that. So I think at this point, you're still seeing a lot of strength right there.
I will say, Tom, if we are playing a drinking game and that is the parameter, then you are buying. Emily, I am curious about some of the details in this bill, the $200 billion going to state governments. And there's a story today on the Bloomberg highlighting which states are actually going to see revenues this year with that stimulus that exceed their previous projections pre-COVID. And those are all the states in the middle. And actually, some of the reddest states are included in that, whereas the blue states are not. They're actually still seeing the declines. How much is this type of allocation crucial to get this bill across?
I mean, Lisa, it's been very interesting to sort of see the debate around state and local funding, right? I mean, all of these lawmakers are representing states and localities, and yet there has been a lot of resistance to getting this additional funding for states and localities in there. I think part of it can be traced back to the fact that Republicans say that they're very concerned about passing a particularly large spending bill. They're worried about inflation. They're worried about raising the national debt and the national deficit. So I think these are all sort of a larger discussion that's happening about the portion of funding in the stimulus bill that's going to go directly to states and localities.
So everyone's been basically trading and operating on the assumption that this is basically a done deal. Chuck Schumer of the Senate saying he has the votes necessary. Are there any potential roadblocks, or is this basically a formality at this point? The $1.9 trillion bill is all but passed at this point.
There are definitely still negotiations going on about supplemental unemployment insurance. We're going to see another vote-a-rama in the Senate where we're going to see more amendments being offered up. You're still seeing progressives try and push to raise the minimum wage. But honestly, at this point, as leaders pointed out yesterday, a lot of individuals within the Democratic caucus, it was going to be very, very difficult for them to vote against this bill, against getting more aid out to the American people. And so you are seeing that confidence from Majority Leader Schumer, from the House Majority Leader Steny Hoyer, that they are going to be able to get this bill passed and get it passed by that March 14th deadline.
Just give me a minute to be really naive and ask a question. Emily, why can't they just negotiate properly? We want to hike minimum wages. What would you like to see? Tax cut for small businesses that might have to pass on that minimum wage hike. Why aren't we having that conversation?
I think that ties back to that March 14th deadline. Lawmakers really want to make sure that those supplemental unemployment insurance benefits are not running out. This is a deadline that they set for themselves months and months and months ago as the target here. And so I think it became a balance between what do we have time to do and what will we be able to do. Also, remember, there is that other infrastructure bill that's coming down the pipeline that Democrats are expecting. And that also is another opportunity to add things like a tax related to the minimum wage.
Final question from me, Emily, and it's about the vaccine rollout and something this administration has done, and it's been welcomed, has put this country on a military footing. How on earth did the president, and this was Tom's question yesterday, get Merck and J&J to work together in the way that they will work together in a foreseeable future?
Well, I think the pressure right now is on just companies to get these vaccines out, to get the economy restarted. I mean, you're seeing a huge amount of pressure right now among this particular issue. You're seeing states like Texas that are clearly ready for things to get back to normal at this point. And so I think there's just a wider pressure out there on companies to work together and to get this vaccine done.
Emily, good to catch up. Emily Wilkins there of Bloomberg Government. We'll catch up with the medical community, the healthcare community a little bit later this morning and get their thoughts on Governor Abbott reopening Texas Tom. Controversial, I think, at this stage of the year.
Yeah, the Post even with an editorial, the Washington Post with an editorial immediately on it yesterday. John, my only question is, when's the next Texas?
When's the next Texas? Yeah, it's a good question.
Huge pressure out there. And you look at the statistics coming in, and, everybody's got their own statistics. But, John, I would constructively say Saturday, Sunday, Monday, Tuesday, those vectors are in a constructive direction to support Governor Abbott.
I'll let the scientists have their view on this,
exactly.
Tom, but the politicians have to weigh a whole host of pressures right now, and it's not just what's happening with the pandemic. On the economy, well, let's talk about the path forward. The president has now come out and said a vaccine will be available for every adult in America by May. That's accelerating the timeline. And, Tom, that is really good news for this country.
Well, it's the depth of it. It's 300 million. So, if you screw up 50 million, John, that still leaves a lot of vaccines. And you wonder when we're going to see, May, June, July, I don't know, where the United States says, okay, we've succeeded. Let's help other nations. And that's where it dovetails in to an impoverished world or, frankly, a developed world that can't get their act together.
It's a global issue, and the global community needs some help. Much more on that through the program. From New York City this morning, good morning. Alongside Tom Keene, Lisa Abramowitz, I'm Jonathan Ferro. Coming up on the program, a conversation you do not want to miss on the commodity market with Francisco Blanch of Bank of America. In a commodity market right now, crude 60.89, up by 1.9%. From New York City, this is Bloomberg Surveillance.
What kind of leader are you?
I'm a leader that works on figuring out destinations that we should aim for and then chooses the direction.
I think you have to be cautious, okay? So I think, these things can make sense. But clearly there's a lot of hype. There are a lot of sponsors that you shouldn't be doing business with, and so some of them will not end well. It doesn't mean you shouldn't do them, and it doesn't mean there aren't some good ones.
From New York City, this is Bloomberg Surveillance for our audience worldwide, live on Bloomberg Television. Here's the price action this morning. Bit of a bounce back after another ugly day yesterday for big tech. The Nasdaq, positive 0.7%. The Russell is where your outperformance is. On the small caps, up by about 1.15. On the S&P, we advance about 0.6%. This is what I want to discuss. The relationship between what's happening in the bond market and what's happening in stocks in the commodity market, and the difference between an inflation shock and a positive growth shock. So let's start with the bond market. Yields unchanged on a 2-year at 12 basis points. On a 10-year up 5 basis points. On a 30-year up 4. So a slightly steeper curve here. Again, 2s out to 10s. 144.12 on a US 10-year. What's been the move? The driver behind this at the nominal level, it's been real yields. Real yields really picking up aggressively in the last couple of weeks. And let's just repeat what I said earlier. The difference between a positive growth shock and an inflation shock. What's the bond market reacting to in the last couple of weeks? Not the latter, the former. So switch up the board. How does this play out in the commodity market? This is what it looks like. When crude drifts higher, people always talk about inflation. But this is a growth story too. So this is crude on the year to date, up 25%. And look at gold. There's the towel. This is about real rates, a growth shock, and the changing opportunity cost of sitting in gold. Gold right now down 9%. Now, Tom, if this was just about inflation and not a positive growth shock, we would not be seeing gold where it's trading at the moment.
And almost going to a 1,600 handle a few days ago. That is of note as well. John, what I would do is walk through the calculus of the real yield, and I don't mean the massive ratings for the real yield. You see it 1 p.m. Friday afternoon as John sets up for the weekend. But, John, what I would look at is that nominal yield less the inflation expectation, and that equals the real yield. It's pretty much stasis now. But what's really interesting is across countries, the different inflationary pictures, and there's been some disinflation and deflation out there. This is a topic we're going to really drive forward to dovetail it with the jobs report on Friday as well. Right now in commodities, and of course every major house is really looking at the idea of a super cycle, the nuances of commodities, the metals, the softs, and of course oil lifting. Francisco Blanch rides the herd at Bank of America Securities, head of global commodities and derivatives research. Francisco, to cut to the chase and to paragraph 1, are we re-seeing now a new commodity super cycle?
Hey, Tom, thank you for having me. I do think we are seeing definitely upside pressures. And in some cases, across the commodity complex, we could see super cycle-like behavior. But I do think it's going to be more concentrated on the metals. Unfortunately, I don't see that cycle happening in oil. I do see upside pressure on oil prices, but as you know, oil is the main commodity. Is the largest portion of the commodity market value. So, and it's going to be hard for oil to see the kind of super cycle we witnessed in the 2000s.
Off the metals, then, how do you apply capital on a bet of the Pacific Rim? Is it as simple as buying renminbi? Is there something more nuanced if you believe in a metals play?
No, I mean, I think you can buy industrial metals for sure. We do like copper a lot. We also like nickel, although we think it's a little stretched right now. We think aluminum will perform well. And then, of course, there is also some of the precious metals that are used in new technologies like silver or platinum, palladium. So we like those metals. And think those have still significant upside over the course of the next few years. But that's kind of the most direct way to do it. And then of course there is also the equities in that space, which I think are also interesting ways to lever into the metal story.
Allow me to jump in,
really
Francisco.
About energy,
yeah. I need to bring in the China conversation as well. What's your read on what's happening with China right now? And can you be this constructive on metals, on the miners, when the recovery in China is really maturing at this stage and not accelerating?
I think you can, because remember, the metals are not just about China. It is true that half of the world's metals demand comes from China. But what we're going to see in the next few years is a huge transformation towards the electrification of transportation, the electrification of industry, and also the decarbonization of electricity networks. And those three elements are very, very metals intensive. So in my mind, metals still have, I think, quite a run ahead. Energy is probably going to run too. And remember, as those vaccines get more and more distributed, and we heard from President Biden yesterday that we may have vaccines for the entire population by May in the U.S. Johnson & Johnson is going to really accelerate the vaccination process with their vaccine. That could also lead to a pickup in mobility around the world. But the thing is, we have 10 million barrels a day of spare capacity, 10%.
On COVID, we are obviously doing this interview in person, which is fantastic. We're doing it in your offices here in New York, but still largely empty, as are my offices, as probably are a lot of people's offices. How important is it to a business like JP Morgan to actually have people physically coming back to work?
It's very important. I mean, I do think there'll be part of the world where a certain amount of people work from home permanently, certain sales, certain ops, so you can track the productivity, et cetera. I think there'll be a large portion who permanently work in the office. Think of our branches, cash management, probably most of the trading floors, et cetera. And there'll be some hybrids where you spend 2 weeks at home and 2 weeks in the office, or 3 weeks at home, a week in the office, or 3 days and 2 days and 2 days, 3 days. But so I think it will reduce the need for commercial real estate, but there are huge weaknesses to the Zoom world. I mean, most of us learned by an apprenticeship system, by seeing mistakes, going to trips, how do you handle a client, how do you handle a problem. So it's hard to inculcate culture and character and all those things when you have the Zoom world. Spontaneous combustion, it goes away. Hard to manage. It's hard to be very critical. You got 15 people on the screen. So what before was like a deep dive question, now it looks a little bit rude. And I took a trip to California and met 100 people all outside, all wonderful, breakfast, lunch, and dinner. It's amazing how much you learn about your own business, your own bankers, your own clients, your own products. And I met with Snowflake and Marqeta. What you learn about technology and systems, you're not going to do that in the Zoom world. And, so bankers, relationships. I think it's very hard to build and develop and deepen a relationship on the Zoom world. So you still, there'll be more Zooming. People like me will travel just as much as I did in the past.
As and when the vaccine does become available for your workforce, will you make it mandatory for people to take it if they do want to return?
It's hard to make it mandatory. And there are laws about that. I think what we'd like to do is kind of have carrots and sticks. We want people to take it. I think it's a far better thing. You certainly can't make it mandatory before it's fully accessible. So that question can't even be answered until June. But I do think you may see some companies do it. I mean, I can see an airline doing it or a hotel company doing it. I can see some people saying if the folks in our branches aren't vaccinated, they're not going in. So there will be pressure. And I would say carrots and sticks, not mandatory.
Another topic very of the now is SPACs. I'm interested, why, when I look at the league table, does JP Morgan not seem to be doing especially well in the SPAC game?
Yeah, we were a day late and a dollar short. Probably a little skeptical going in.
Are you still skeptical?
I think you have to be cautious, okay? So I think if it's a good sponsor, if it's a fair sponsor deal, if it's got good pipe investors, if you really do due diligence in the acquisition, these things can make sense. But clearly there's a lot of hype. There are a lot of sponsors that you shouldn't be doing business with, and so some of them will not end well. It doesn't mean you shouldn't do them, and it doesn't mean there aren't some good ones. But, to us, we want to hold to JP Morgan standards the people we actually do business with.
Just turning to my home country for a moment. Look, I know you've been hesitant in the past to opine on UK sovereign issues, but as a Brit, I can tell you there are scores of us, thousands of us, who would love to hear your opinion on London, particularly. What is the future for London as a financial centre now that we have gone through Brexit and this sort of much harder version of Brexit than many people expected?
On Brexit, and I always got notes from Brits saying, "Go home, Yankee. keep your opinions to yourself." Look, I was not in favor of hard Brexit. We had a hard Brexit. It's going to cause difficulties. You've seen them. It's going to reduce their GDP, all things being equal. Look, I've always understood why you want to free yourself from what people considered a sclerotic Europe. But it may not play out that way. So if I was a Brit, I'd be really careful about how you're going to compete in the new world. You have to deal with Europe. You're going to have to deal with all these other trading partners, et cetera. In terms of financial services, there was no deal done. So you really don't know. And now we're arguing equivalency or not. I think my view is what you're going to see is over time, parts of what are done in London will be done elsewhere. So London will always be a financial center. It won't be the financial center of Europe. You're going to get other financial centers like Paris and Frankfurt, Dublin, maybe Amsterdam. And you've seen it already in certain products. That doesn't mean it won't extend to other products. Like, if equity trading, why not FX trading? Why not bond trading? Why not? And I do think there'll be political and regulatory pressure over the next 10 years to move some of those things. So, and we want to leave it just the way it is. We love London. We love Britain. It's very efficient for us. And it's very efficient for our clients. It's much cheaper, et cetera, to leave it the way it is. But that's got to be settled between Europe and Britain. And so far, it doesn't look particularly good.
Much easier question for you. We're obviously sat here in New York, your home city. There's a lot going on in New York right now. There has been an exodus in the financial services industry, a lot of very smart people, big companies moving elsewhere. What keeps a business like JP Morgan in New York?
Yeah. So again, I think New York could have a little bit of a difficult time too, because already real estate needs will come down. Most of us are going to go to more open seating because you don't need 100 seats for 100 employees. You're going to need like 60. And then, of course, if you have higher individual taxes and higher corporate taxes, that does a pretty good job driving people out, as does crime, inhospitable business environment. So, what the city needs to do is make itself what it has been for, just like London, a wonderful, absolute place to work and or visit. So that's the arts, it's the sciences, it's the parks, it's the safety, it's the soundness, it's the tax system, and for London, it's the rule of law, it's all the things that surround the financial system there. It's the lawyers and the accountants and the tech people, and they're all kind of important. So we need to do that here. You're going to have some exodus anyway, because some of the bad stuff has been happening too much, and you've seen a bunch of people already kind of vote with their feet and leave the city. So, but New York can fight back. It's just got to have a real strategy.
Before we go, just a quick Jamie Dimon question. You're going to be 65, I think, next week. Yeah. You've been in the job since 2005. Obviously, I think the only bank CEO of a major bank to have gone through the 2008 crisis, still be navigating through the COVID crisis. It's not up to you, obviously. You have a board and shareholders. But if it were, how much longer would you want to do this job for?
5 years.
That's the only answer. I know that was going to be the answer.
It's the only answer I've ever given. So, but it will be up to the board. We've got great people here. They did a great job running this company when I was unable to. So, which I think proves that we got people in place who can do these things. And so,
how many people of your direct report group could actually step up and do the CEO job?
I think the ones I'm going to mention are Gordon Smith and Daniel Pinto. There are others, but those two co-presidents, co-chief operating officers, they did it when I wasn't here. They've done an outstanding job, and obviously we have tons of exceptional people.
How important is it to a business like JP Morgan to actually have people physically coming back to work?
It's very important. I mean, I do think there'll be part of the world where a certain amount of people work from home permanently, certain sales, certain ops, so you can track the productivity, et cetera. I think there'll be a large portion who permanently work in the office. Think of our branches, cash management, probably most of the trading floors, et cetera. And there'll be some hybrids where you spend 2 weeks at home and 2 weeks in the office, or 3 weeks at home, a week in the office, or 3 days and 2 days and 2 days and 3 days. But so I think it will reduce the need for commercial real estate, but there are huge weaknesses to the Zoom world. I mean, most of us learned by an apprenticeship system, by seeing mistakes, going to trips, how do you handle a client, how do you handle a problem. So it's hard to inculcate culture and character and all those things when you have the Zoom world. Spontaneous combustion, it goes away. Hard to manage. It's hard to be very critical. You got 15 people on the screen. So what before was like a deep dive question, now it looks a little bit rude. And I took a trip to California and met 100 people all outside, all wonderful, breakfast, lunch, and dinner. It's amazing how much you learn about your own business, your own bankers, your own clients, your own products. And I met with Snowflake and Marqeta. What you learn about technology and systems, you're not going to do that in the Zoom world. And, so bankers, relationships. I think it's very hard to build and develop and deepen a relationship on the Zoom world. So you still, there'll be more Zooming. People like me will travel just as much as I did in the past.
As and when the vaccine does become available for your workforce, will you make it mandatory for people to take it if they do want to return?
It's hard to make it mandatory. And there are laws about that. But I think what we'd like to do is kind of have carrots and sticks. We want people to take it. I think it's a far better thing. You certainly can't make it mandatory before it's fully accessible. So that question can't even be answered until June. But I do think you may see some companies do it. I mean, I could see an airline doing it or a hotel company doing it. I could see some people saying if the folks in our branches aren't vaccinated, they're not going in. So there will be pressure. And I would say carrots and sticks, not mandatory.
Reed, thank you so much for joining us. It's great to have you here on our anniversary show. Your genius is to see the future. You invested in companies like Facebook and Airbnb before they were juggernauts, but tech moves so quickly that I'm sure over the past 10 years, some things have surprised even you. What has surprised you over the last 10 years about technology?
Well, lots of things that surprised me. One of probably the biggest surprises for me was the resurgence of artificial intelligence. Because I did my undergraduate major at Stanford in it, so I thought I knew it and I kind of had studied it. And then all of a sudden, it completely reopened like almost every industry. Like I've been saying something to my friends for a number of years, which is if your organization is 20 people or more, you need to have a technology strategy. Namely, where is technology going and how does that do it? It's not an IT strategy. It's not Windows, not Mac. It's what are you doing with technology? And now AI is accelerating so much that for the vast majority of industries, you also say, what's your AI strategy? Mm-hmm. And it's anything from cars with autonomous vehicles, like Aurora and all that kind of stuff, or, medicine, education, the entire thing.
So as you look ahead then, what do you think will surprise us about the next 10 years?
Well, one of the things about making predictions is A, you frequently look foolish, and B, the future is actually usually both sooner and stranger than you think, like a different vector. Like for example, 1950s they thought we'd have flying cars. It's finally coming, and that kind of thing. So you don't really fully know. But what I do think is the most interesting thing to watch is the intersection of all of these different technological trends, like AI with synthetic biology, or even AI with nuclear fusion and fission. And that these intersections will cause accelerations and new developments that people won't necessarily think of. And obviously, people tend to go, oh my God, change in the future, is that scary? It's like, look, there's always some risk with that. And that's part of the reason why you try to change it, because that's also how you get greatness, right? Like, the first invention of the manufacturing line was kind of a little difficult in humanity. But as we get there, we end up with a better life for lots and lots of people on the planet.
You have a podcast called Masters of Scale, where you're looking at companies that grow super fast and how they do that. And your job essentially is to make bets on the future. When you look ahead, what do you think will be the next Facebook or Airbnb?
Well, so I do think that every time there are new transformations of kind of like social platforms, Greylock has had a history of doing this, not just obviously LinkedIn and Facebook, kind of the previous generation. I say that with some sheepishness as the co-founder of LinkedIn is like, no, we're still alive, we're still going, we're big. But also, of course, now there's Roblox, Discord, Nextdoor, neighborhoods, like all of these different transformations. And I think that actually that when you look at the major areas of human life, which can be entertainment, like games and Roblox, or where you live, Nextdoor, I also think there could be things around sports. There could be other kinds of things that will be there. So I think networks will continue in various ways. And then I think that also adds into the various areas of technology. So like, for example, we started doing stuff in crypto really early because we said, hey, this could be a new network platform for building new parts of the financial infrastructure that would help both the emerging world and the developed world.
Let's talk about crypto for a moment, because Bill Gates just told me he's not bullish on Bitcoin. If you have less money than Elon Musk, he thinks you probably shouldn't buy it. What's your Bitcoin take?
So I'm more optimistic than Bill. What I've thought for a number of years is that the problem with the dialogue around Bitcoin is it tends to be all Bitcoin or no Bitcoin. It's like, will Bitcoin replace the dollar? And actually, in fact, I think it's just another asset, another storage of value vehicle amongst the mix. And so, for example, you said, well, should you buy gold or not have gold? Well, you certainly shouldn't put all your money in gold, right? Question is it a little bit more, that kind of thing? And I think the same thing is true about Bitcoin, which is in this kind of portfolio management of a modern hyper-connected world, some diversity is a good thing. And then it's up to your kind of, appetite about what the portfolio balance should be, just as how much you would do tech stocks or emerging stocks or other kinds of things as a kind of a question of how do I balance my portfolio?
So let's talk about AI for a moment, since you think every company now needs to have an AI strategy. How do you think our lives will be different as a result of AI a decade from now?
So I think the things that we have line of sight to are essentially anything from applications that are like, changing the transport infrastructure, right? So the notion that our kind of how space is done through autonomous vehicles and all the rest of that, I think, with Aurora and Neuro and Nato and those kinds of things will all actually, in fact, have a massive impact there. I think in medicine, I think actually, in fact, going through the portfolio of drugs and now saying, look, so we have genetics, right, tied up with AI, say, hey, let's retry all of the drugs that we previously disqualified for side effects or some fatality cases and see if those tie to genetics. Well, then, oh, just these genetics are the only ones that doesn't work? Well, all of a sudden you have an entirely new portfolio of drugs that could help with ailments and longevity and good lives. AI tutors. You say, well, we'd like to be able to have talent everywhere in the world, able to make, kind of like the most amazing lives they can. Well, actually, in fact, we can now teach everyone. Like teaching is actually very expensive. Schools are very expensive. Well, now we can at least provide some teaching everywhere that we can get people connected into the network. And those are just the beginnings of the kinds of things. And we will always be surprised as the future is sooner and stranger than you think. We'll always be surprised at some things that, even smart people didn't even realize true now.
Well, and some of your smart peers have said they're terrified of AI taking over the world. Do you share any of those concerns?
Well, I share the concerns always with, which technologies most excite me and also which terrify me tend to be together, because the question is they have the greatest possible impact. Now, I tend to be an optimist, and that I think that we can actually, in fact, develop in a way that it's massively utopic, massively positive and optimistic, but we have to be attentive to it. So it's not just, it just happens. That isn't actually, in fact, the way this plays. It's actually, in fact, no, we pay attention. And so I think with AI, I think we have to make sure that it doesn't cause, kind of systems collapses. I think that, when people say, well, but what happens if the AI goes rogue, a la Terminator? You're like, well, look, I watch those movies too. By the way, what happens if the human beings go rogue? I watch those movies too. So it's how do we kind of create the right kind of infrastructure for the right kinds of outcomes?
Now, on that note, that what you just said, that some of the best technology or the most exciting technologies are the most exciting and yet also the most terrifying. The biggest technology companies, Facebook, Google, Apple, Amazon, are under major antitrust scrutiny. Do you believe these companies are too powerful now, such that the next Facebook or Airbnb or LinkedIn wouldn't stand a chance? Are they stifling innovation?
Well, one thing I think is certainly the case is they're not stifling innovation, because part of the thing is there's 5 giants going to 10 versus 5 going to 3. And in that competition between them, there's lots of space for, funding startups, possibly making them into the next big companies, like Airbnb and others. And so, that is not my worry. I also think that most of the times when people are talking about antitrust, the problem that they're talking about is not solved by antitrust. Like you say, well, we'd like to have better information flows and more accuracy and more truth in that. Antitrust is not the solution, for example, to that problem. Or you say, well, okay, we'd like to have the return of manufacturing, to, like, for example, U.S. Manufacturing strength. Well, you better hope we get to the technology and the robots in order to do that. So, and again, antitrust is not the solution to that. So I think that one of the things that we should be careful about when we're thinking about antitrust is which problems exactly are we trying to solve, and also to take obviously a global context while we're thinking about it.
Now, one trend that is almost completely new this decade is the SPAC craze. You just sponsored a SPAC to take Joby Aviation public, an air taxi company that won't have a product on the market for several years. Why Joby?
So when my career is creating networks, like we've been talking about. And when I started thinking about this, and I'd already been working on kind of transportation, with Aurora and Neuro and Auto, and how to transform human life through it. I said, well, we moved to 2D to 3D. And what would that do to commutes? And what would that do to the transformation of space? Okay, I had to do a whole bunch of due diligence on the plane itself, make sure that they were actually, in fact, the tech leaders, that they had solved not just the issues around safety, but noise, which is a key issue, and economics, so that it can be broad-based and participatory. And then the reason to do it through the public markets is because Joby's success is not just its basically world-leading tech, but also acceptance by cities, by communities, saying, yes, this would be a very good addition to our lives. We'd rather actually have less congestion during commutes, and we'd like to have more of this being able to do it by flying over. And we'd like to be able to make the ease of the transport to the airport so much more better on a regular basis, and that kind of thing. And by the way, a public market company is the right way to do that. Higher transparency, higher accountability, a higher level of trust from that, an ability to engage in the dialogue. And that's part of the reason why a SPAC versus a classic kind of private round made sense here.
Now, Charlie Munger, Warren Buffett's right-hand man, just said SPACs are an irritating bubble that will most certainly end badly. What's your reaction to that?
So I think look, we have an innovation and a renovation going on. How do we bring companies to the public? And so there's going to be great, and obviously we hope Joby's that, and there's going to be, kind of like mistakes. And so that'll be that range. My belief is that it's here to stay because that renovation is good. Like Joby is kind of a classic thing of, actually, this is a good thing to have public engagement and discourse in to bring all that attention, because it makes regulators more comfortable with the governance of a public company, the certification process. It enables more democratic participation in the economic upside because, the public market versus the, relatively limited access private markets. And so I think the SPAC innovation is here to stay. I do think that we're going to learn, yes, do these, don't do these, right? Just like, for example, what was happening in the internet boom. It was like, wasn't like it was all a mistake. It was like, those ones were mistakes. These ones were right. So more of the ones that are right, less of the ones that are wrong.
Now, I'm sure I've asked you many times over the years whether or not we're in a tech bubble, and here I am. I'm going to ask it again. Are we in a bubble that's about to burst? Dick Costolo, the former CEO of Twitter, told me he thinks we are headed for a 20-25% correction, whether it's public or private. Are you seeing inflated valuations?
Well, it definitely feels, aggressive, hyper, things that you would lead to thinking about a bubble. And so it's totally possible. The one thing that the dialogue likes to have, is bubble or not, is it's still the case that we are in an accelerating technological future and the things that are going to be possible. And those are the kind of space I play in. So it tends to be like, well, look, is it overvalued for this year? Maybe. Is 5 years from now, technology still going to be the important driving factor about how we improve our lives, our work, and all the rest? Yes, right? And which of the companies that are doing that are going to be increasing in value over time, maybe with some blips and ups and downs? Sure.
So on the notion of the private markets, Aileen Lee was on the show earlier. She coined the term unicorn as it pertains to tech startups, categorizing a unicorn as any startup with a $1 billion valuation. Is it time to raise that number? Like, should it be 2 billion or 5 billion?
Eileen was great in that coin, in the term, and I love the term. I think it adds a whole bunch of things. Now, of course, it doesn't seem so unique anymore. Like the unicorn was like, there's few of them. It's like, well, actually now there's herds of unicorns. So maybe we need something else. And I think that's part of the reason why people started using the word dragon, and I think that was like 10 billion. So who knows? But by the way, the growth of these values, people say, oh, see, that's crazy. And it's like, well, the world becomes more connected, larger customer bases, technology is driving to something that's a platform for the future. Hopefully we're increasing productivity and quality of lives as we bring more and more people into the middle class around the world. All of those things would naturally also to market growth. So it's not just a function of, oh, look, the valuations went up, it must be crazy. We are trying to make world progress. And I think that there are a bunch of signs that, with turbulence, we are.
In my conversation with Bill Gates also said that he thinks we need hundreds more Elon Musks. I'm sure he would also say we need hundreds more Reid Hoffmans to combat climate change, to start the innovation we need to fix the world's most pressing problems. Do you think we'll see more truly visionary leaders emerge over the next decade? Are the conditions ripe for that?
Well, I hope so. I mean, I do think that one of the things that worries me sometimes about the dialogue in the US and the rest of the world is say, look, actually, in fact, we need to be building towards the future. And so, being anti-entrepreneur or anti-big company or anti-tech, it's like, no, those are the things that can very possibly lead us into the future. So what we shouldn't be saying is, oh, that's bad. We should be saying, hey, let's do X rather than Y. Let's have this be the solution. Like, well, okay, look, we need to have more inclusion. Of course, we need to have more ability for many people to participate in the technology industry. Of course, and absolutely, and let's do it this way. And that's the kind of thing that I think is important in the dialogue. And so I think it's important that we realize that, when people go and create these big new technologies, big new companies, that's one of the forms of heroism that we love, along with civil rights heroism, along with, scientific heroism, right? We live together in this society because we have heroes in each of these vectors who contribute, and I think that's really important. And so, that's one of the reasons I've been doing entrepreneurship as philanthropy for decades now. Endeavor, Kiva, other kinds of things, in order to try to keep that path of we can build a better future, going.
Well, and how confident are you that you and other investors can open the aperture and find heroes that don't just look like Elon Musk?
Confident. So, for example, one of the things that we just did recently with Greylock is we partnered with an excellent organization called Management Leaders of Tomorrow, which is basically building the network for people of color, saying, hey, here are people who are super talented, et cetera. They just need the right network opportunities in order to get there. And that's how, obviously I think in networks, LinkedIn is like, how do we build out the network to be inclusive? Because once you have the network being inclusive, everything else should follow.
You mentioned world competitiveness there. How concerned are you about the rise of the tech industry in China?
Well, so I'm generally positive about rise of the tech industry for kind of positive implications of the world. And I think one of the things we want to get to with China is co-opetition, not just competition, not just challenge, but I do think that, like, for example, if you go around to a lot of very smart people in Silicon Valley and say, 20 years from now, how would you bet between Silicon Valley and China? A lot of people say, well, China, there, a lot of really smart people, a lot of really smart engineers, a lot of innovation going on. The game's on. We have some advantages. They have some distinct advantages. And so I think that it's really important that we pay attention to as a country to say, look, technology is going to dictate the infrastructure of the world, right? And you see elements of it in 5G and chips and kind of, and Huawei and other kinds of things. And it's like, look, if you want to be playing in the infrastructure of the world game, we need to be, kind of contenders and leaders in the technological space. And I think that if we get too internally focused, we can lose that. And then it's China's game.
You've been much more openly political over the last several years. And I wonder, if there is one thing the Biden administration could do that would make a difference for the tech industry, what do you think that would be?
Well, look, I think the Biden administration, almost by just being them, will make a big difference. Rule of law, kind of stability, no random tweets, no random like kind of attacks on our allies. The list goes on and on. Like, hey, let's listen to the medical experts when a pandemic happens and pay attention early to that, and not try to say, hey, you can solve your pandemic by injecting bleach, your disease. And so just by being them, there's going to be a huge amount. If I were to give one piece of advice to the Biden administration, what I would say is, look, the tech game is not guaranteed. We are not, while over the last few decades, the US has been blessed with a very robust tech industry. By the way, it came a lot from the universities and financing and rails, but it's no longer, kind of like we've eaten all that seed corn. And so to pay attention to it is something that actually, in fact, if you want it for the next 30 to 50 years, maybe even the next 10 to 20, it's something to invest in and partner with. Doesn't mean listen to, do only what they say. It should be a partnership. It should be a dialogue for the better society. But it's an important part of the solution.
How Facebook and Twitter decide to moderate or not content on their platform might be their biggest test of the next decade. I mean, do you think it was the right decision to boot Trump for good?
Roughly speaking, yes. And here's a simple reason why, which is he was advocating violence. He says, oh, I wasn't really. But it's like, no, you were advocating violence. And we even saw elements of it, all the way back to Charlottesville, let alone the insurrection. Now, if they could reliably get him to say, hey, I won't do it again, then maybe it wouldn't be boot for good. But he doesn't keep his deals. He doesn't even pay the people who work for him on their last paycheck, right? For small businesses and other people. So since he won't keep his deals, then you can't reliably have him come back in and say, I'm not going to advocate for violence. So, I think it made sense. It's regrettable. It's concerning, of course, because we wouldn't want any major political figures to be, to be in that space. But I think the non-advocacy of violence is a very important thing.
And you're not worried about free speech an assault on our rights?
Well, I think we do a lot in the tech industry to try to make, free speech strong and vibrant. And generally speaking, the whole tech industry tends to be very, free speech, like, hey, let's give everyone a voice in order to do this. And that's been everything from blogging to obviously, social networks. And so, look, am I concerned that that there may be idiosyncratic blocks? Yes, but on the other hand, like, one high-profile case, and as far as I can tell, there's nothing systemic going on at all there, and that all of the claims that there's something systemic going on there is simply political, claptrap.
What do you think the next big social platform will be?
Well, there's already a few in the sides. There's a gaming one with Roblox. There's a neighborhood one with Nextdoor. There's various of these that are in motion.
There's TikTok. There's Discord.
Yep.
Snap just hit $100 billion valuation, which was surprising.
Yes, exactly. And one of the things, maybe the right way to think about the great question you just asked me is to say, it used to be there was kind of like one at a time, right? And now there's so much going on in tech. The answer is, how many will there be, right? Like what's the number of them versus the one, and what's the different vectors that they'll be operating on, right? Because, like, for example, will we now have augmented reality through mobile phones? That's going to be the next social platform, like those kinds of things. Actually, in fact, might be, because there's so much happening in tech, that might actually be the actual shape of the answer.
I want to close with your near-term and then long-term views. When you look a year out, as we come out of the pandemic and into hopefully a new normal, what changes about Silicon Valley and what stays the same now that we've been through this experience?
Well, I think what changes is that we've gotten a lot more familiar with kind of distributed workbases, and the fact that you can actually have distributed companies. And so I think all the tools being accelerated there, and I think there's a lot of folks, but I think it won't be, like, I think that 3 years from now, at Greylock, we'll still be hearing pitches from companies that are like, well, we got a founder here, and we got a founder here, and we got a development office here, and we got a development office here, and like these 3 people are working from their houses, and I think that will still be the case for what's happening. And so that, I think, has broadened out more. We at Greylock have actually invested in more things outside of Silicon Valley than we have in the last few years, just because it's the natural way of doing it. The thing that I think will actually come back is that still there's an intense network effect in Silicon Valley. That people say, I want to go join it, like found a new software company. I want to assemble a group of founders and early people to create a bold new product. Well, Silicon Valley has its own network effect. It's a network effect of technologists and companies and universities and capital and all the rest of that stuff. And so I think that will come back. Now, my hope is that it will also come back in multiple areas around the US and around the world, and that this kind of smash the world with the COVID mallet will then allow more areas to grow at the same time.
So then let's talk about the next 10 years. What do you think the biggest challenges? What are the biggest challenges that the tech industry will face over the next decade?
I think the biggest one, which is kind of obvious to everyone looking at the news today, is that now tech has become so important. It's part of social infrastructure. It's part of the way we live and operate and so forth. And so how do you have society as a customer? How do you treat that? And what are your responsibilities as an entrepreneur, as a founder, as a CEO, as a tech company? How do you engage in dialogue? Who do you engage in dialogue with? What are the places that when, entity X tells you, this, I stand for society and you should do X. And, how do you do that? And how do you navigate that? And by the way, that'll be true within societies, and that'll be true across society. So obviously a growing tech nationalism that says, well, we should have our own tech industry. All of the tech should be homegrown to us. And that's not good in some ways. I mean, the kind of part of the thing is, by the way, diversity is good, but actually platforms and how we develop and what does, security look like and all the rest of the stuff, those are things that at least good to be good in dialogue, if nothing else. And so those are the challenges I think the tech industry has in front of it.
Any advice for the next generation of investors and entrepreneurs?
there's a quick one and a long one. The quick one is continue to be bold, continue to think about the way the world should be, and really, don't lose that optimism and hope for it. And then the long one is, in addition to that, make sure that you're engaging in dialogue, because the people who are not doing that don't want to feel like they're just along for the ride. They want to feel like at least their voices are being heard and that they're participants in the future that is being shaped.
And this is the last one, Reed. I was just speaking with Esther Dyson, the tech investor Esther Dyson, who says she's excited to retire on Mars. Are you in that camp? Like, do you think we need to be looking to other planets for our future?
Esther is wonderful. She can't spend enough time singing Esther's praises. And by the way, thinking forward is one of Esther's many trips that we should always be doing. Obviously, my tendency says let's make sure we're solid on this planet. We fix this planet. So like that's the reason my energy has been more in clean energy and other kinds of things versus space. People should be doing space. People should, the Mars thing should be happening. But it's no. This planet works very well for humanity. Let's make sure that we're doing well with this planet.
Why, when I look at the league table, does JP Morgan not seem to be doing especially well in the SPAC game?
Yeah, we were a day late and a dollar short. Probably a little skeptical going in. Obviously,
are you still skeptical?
I think you have to be cautious, okay? So I think if it's a good sponsor, if it's a fair sponsor deal, if it's got good pipe investors, if you really do due diligence in the acquisition, these things can make sense. But clearly there's a lot of hype. There are a lot of sponsors who you shouldn't be doing business with, and so some of them will not end well. It doesn't mean you shouldn't do them, and it doesn't mean there aren't some good ones. But to us, we want to hold to JP Morgan standards the people we actually do business with.
Okay, guys, that was it for today. As you can see here, the dollar and the Japanese yen here just spiked a little bit, but now it's starting to go down. The same thing here on the dollar Swiss franc. As you can see, as we told you earlier, from here it will be a downtrend. Okay, that's it for this week. We will see you next week. We will do another live trading Monday or Wednesday. Have a nice day. Bye bye.
Bubbles overseas. There will be a day of reckoning, they say, in terms of property and corrections in markets. How much do you put credence at this warning from this regulator? How concerned should we be? Because it adds to the febrility of markets, doesn't it?
Absolutely right. I mean, this is a market environment that's characterized, of course,